Well, good morning. It's February the 11th. It's Super Bowl Sunday here in the US. Let's take a look at what's been happening at asset class and in the broader private capital markets this week. Well, this week, as we do every month, we have our Throwback Thursday. So Throwback Thursday was an opportunity for us to look back at January and look forward to February. January was an active month for us. It's always a little bit slower as people get off the slopes and back to work. But nonetheless, a busy month for us. February is shaping up to be a really strong month for us. So looking forward to diving into that over the coming weeks and finishing out the quarter strong. We did have an opportunity to share what's happening in the markets and some interesting developments, pluses and minuses. And it prompted me to think about a new segment that I'll introduce here, perhaps sporadically to these vlogs, what I'll call the bearish or bullish section. So let's dive into that. So let's start with the bearish outlook. Well, there are some headwinds in the market. I've talked before about the commercial real estate sector writ large having some challenges. It's not true to say that every part of the commercial real estate sector is a challenge. There's some really strong parts to it, the logistics, the healthcare facility sector, industrial, hospitality, all strong sectors. The office space clearly is a challenging sector. There was a really interesting section of the All In podcast this past week. If you get a chance, check it out. David Freeberg broke down the commercial real estate sector in the US. And broad outline numbers are that it is a $20 trillion market, a $20 trillion valued market here in the US. About $3 trillion of that is actually in the office space sector. So it is a relatively, it's significant, but a relatively minor part of the overall market. Of that $3 trillion, the value of that needs to be written down by banks, institutions, private equity companies. The argument is that $3 trillion is actually probably valued closer to 1.8 trillion. And so this is a challenge that is an impending challenge. It needs to be managed by the private equity companies, by the institutional investors that have put money into that. So pension companies are very large contributors to private equity, large investors in the commercial real estate sector. Clearly banks and thrifts very exposed there as well. So part of the bearish outlook is the write down of that 1.2 to 1.4 trillion, depending on what market analyst you look at. That needs to wash out in the market in the coming year or two. It is a challenge that the market's going to have to deal with. My personal perspective is that having worked with and been exposed to some really brilliant minds in commercial real estate, I've got every faith that they'll be able to work through either the financial restructuring of the debt that needs to be managed in that capital stack, to either extend, there is an expression, blend and extend, or pretend and extend, as I think David Sachs referred to it in the All In podcast, that the banks will look to extend those loans rather than take the write down that's coming up on that. But yeah, that is a challenge. It's one of the more bearish elements of the market. So we'll see how that plays out. But my prediction is that in the coming years that those geniuses in commercial real estate will figure out a financial structure to manage that, so it's more of a soft landing. Clearly there are other initiatives such as the repurposing of office space to residential and the like, so we'll see how that plays out. Anyway, that's the bearish outlook. The bullish outlook for this week, if you look at the news around the IPO market, there's lots of chatter around the potential for upcoming IPOs this year. There's talk about Reddit very actively engaging in the IPO market, Stripe, Sheen, the much maligned and controversial Sheen coming to market with an IPO. There's lots of talk there about the IPO market becoming, I won't say hot, but certainly warming up relative to prior years. That's a great sign, and the importance of the IPO market for the private capital sector is that it gives, first of all, it starts to provide some marks to the market on valuations and multiples. that companies are getting when they move from private to public. It's giving some out to money that's been invested in those companies. So the opportunity for liquidity is always good for the private capital markets. There needs to be that full cycle of investment, clearly patient capital, but at the end of that there needs to be an exit, and that exit will come either by way of a trade sale, a strategic sale, or an IPO. And so the IPO market becoming warmer is a good sign. So that's a more bullish outlook. I think the S&P, again, continuing on its tear. There's talk about it, potentially hitting 6,000 this year. So very positive there. We're at a personal level at Asset Class definitely seeing an uptick in the market. There are more funds coming to market. All of that very, very positive signs for the private capital markets. People getting back to work. Money can only sit still for so long. People can only be patient for so long before getting back in the game. And look, this is the new reality. Companies are being a lot more realistic. Private companies raising in the private capital markets are becoming more realistic about their valuations. Investments are being made, and I think that that correction that happened last year is starting to fully realize itself in the markets now. And so that's all good. I think that's a reason to be bullish. So that's the bearish and bullish outlook for this week. Also this week I had the opportunity to record the latest episode of The People of Private Capital. This week I was joined by Thomas Powell. Tom and I go back over a decade. I engaged with Tom in the early teens when I was raising capital for a software company that was running in the Valley at the time. Tom and his family office, which ultimately became a smaller private equity firm, invested over many years in lots of different asset classes: commercial real estate, energy, in tech. And so Tom shares with us a perspective, a very personal perspective, but also a broader perspective on regulatory oversight, the challenges that come when the regulators come knocking, the onus that you have to expose your books and records, all of your communications, etc. We dive into, well, first of all, what is the reality of that? And secondly, how can you manage the risks and the associated costs of protecting yourself and indeed defending yourself in situations like that? Really interesting character and a great episode. Check it out, The People of Private Capital. I'll add a link to our website so you can subscribe to the podcast. I think you'll find it interesting. If you're a general partner, you know what the risks are that come with that. And it's interesting to get Tom's perspective on that. So check that out, The People of Private Capital, wherever you get your podcasts. But as I say, we'll provide a link in the post below. So please subscribe and check out our prior episodes. Some really interesting stuff in there. So that's it for another week. As I say, Super Bowl Sunday. I'm not a great sports fan, but I will make a prediction this week. I think it's going to go to the Chiefs. The Taylor Swift effect is just too large, in my opinion. That's the extent of my sports knowledge. I link it purely to Taylor's association with Kelsey. So we'll see how it goes out. But my call this week on the Super Bowl, that the Chiefs will win against the 49ers. Good luck to everybody who is participating. If you're betting on it, good luck with that as well. And we will catch you next week. Take care.